Good to see you, Bonnie.
Good to see you. Always good to see you.
Always good to see you. And we'll see you up in China as well soon, too.
Dalian.
In Dalian at the World Economic Forum. Hello, everybody. Everybody
Hello.
get something to eat, I hope. Bonnie, you know, it's not to hit you hard right off the bat, but it's been a kind of a tough run for the Chinese economy and Hong Kong stocks. Since you took over in March, though, as CEO, it's up about 11%, the Hang Seng Index. It's all because of you.
It's all because of me.
I'm sure. So obviously, you cannot control the pace of growth in the Chinese economy. You cannot dictate Chinese government policy, and you definitely don't have your finger on the pulse of geopolitics right now. But what is your utmost priority to return confidence to HKEX and the Hong Kong Stock Exchange?
Right. I think actually you described it very well. There are a lot of things that I cannot control, but I can get myself and HKEX ready for the opportunities which are to come. So today, I counted, it's my 97th day as CEO. You know, by Sunday, I'll be celebrating my 100 days as CEO together with my Dragon Boat team in Stanley. But anyways, what I would like to say is this. I think what we are observing is, in fact, a lot of changing orders globally. And that added to the fact, that added to this phenomena you just mentioned, which is the fact that there are so many things we cannot control. Geopolitically, things are obviously changing a lot. The way, capital is formed these days, and this has a lot to do with what we are observing in the IPO markets. That's also changed significantly in the last few years. Technological innovation in the area that we are most relevant to in the exchange business, that has also significantly changed. And of course, a lot of you are aware that earlier, just a few days ago, the U.S. market has turned to a T+1 settlement, right? So that's one manifestation of this kind of technological enhancements that, exchanges need to continue and continuously work on to match the needs of clients and investors around the world. And last but not the least, financial markets in general, that's a big sort of set of changes as well. So nowadays, as exchange operators, we don't only compete with fellow exchanges, we compete with a very new set of competitors, including big techs, digital natives, etc., right? So as I became CEO, I was sort of thinking to myself, what should I do? What should I focus on? And therefore, one of the first thing I published is a blog. This is probably about 2 months ago. I gave it a title, Redefining Resilience. And I think that is critical for exchange operators, is to make sure that we can really handle all these, or continue our operations amidst all these changes. Right. And as part of that blog, I also announced that we are investing very big into technology. So we are going to embark on a very exciting journey building our own derivative platform. This is called the Orion Derivative Platform. This will be a multiple-year exercise, but that's one example of the kind of things that I'm most focused on. I do think that, the long-term promise is good, and therefore we need to get ourselves ready, yeah?
Yeah, the proximity to China, you've always been talking about that, obviously, and it is an advantage. It's a competitive advantage to China. Sorry to bring you into the Bloomberg terminal, but we're going to bring up the chart. You've seen this chart.
Yes.
You know what I'm talking about. The drop-off in IPOs, basically the smallest combined value last year in a couple of decades, on top of a 68% fall the year before that. So how are you going to get those bars going back up? Obviously, there are different schemes in place. The pipeline, you've said, is about 100 deep. What can you update from about a month ago when we last talked to you?
Sure. So, yes, I'm very familiar with that chart.
Did we bring it up, I hope?
First of all, it's not specific to Hong Kong. I think, globally, the IPO market has been very challenging for the last couple of years. I mentioned earlier, right, capital formation, has changed a lot. Companies stay private for longer. And for a lot of companies, as a result of, geopolitical considerations and other reasons, they may choose to list on the domestic exchanges. That's one phenomenon we have picked up in the last couple of years. Anyways, what we are doing, first of all, I think the proposition that we're able to offer is still very compelling. As you know, getting a listing status is in Hong Kong, and this applies to both mainland Chinese companies, Hong Kong-based companies, as well as international companies, give you that unique opportunity to be Stock Connect included, which is unique to Hong Kong. No other exchanges offer that.
And this is the 10th anniversary of the Stock Connect.
And this year is the 10th anniversary of the Stock Connect program. And once you're included in the Connect program, that means southbound and flows. This is mainland investors looking to diversify their investments can therefore invest in the stocks. And I will tell you that recently we are seeing very strong flow, southbound flows, which I think is a reflection of the increased interest of mainland-based investors to diversify their investments. Obviously, Hong Kong is a very convenient place for them to treasure hunt, shall we say. We provide them with this very convenient piece of infrastructure, which is the Stock Connect program. And therefore, I think that long-term promise is there. Now, you asked me what has changed, right, since we last spoke. I think a lot of you will be familiar with some recent announcements from the mainland authorities, and this is in April, so just a couple of months ago.
The CSRC, the Securities Regulator, April 19th.
Yeah, there are two sets. The first set was from the State Council, which is the 9 measures. That was on the 12th of April, followed very shortly by the CSRC on the 19th of April. And the clear message is, from one of the measures in the CSRC set of 5, is that they are going to encourage leading companies in the mainland to come to Hong Kong to seek a listing. Now, if you look at that in conjunction with the State Council 9 measures, I think there is a very clear direction of travel, because the 9 measures is more aimed towards the Asia market itself, right? They're talking about a lot of reforms to raise quality, etc., which is very good. They would like to also encourage Asia-listed companies to be more frequent in terms of paying dividends to investors, which to me translate into this kind of a division of labor amongst all the exchanges, the 3 domestic ones on the mainland and Hong Kong, which is that I think Hong Kong now have a very special role to play in terms of supporting fundraising needs of the new economy companies, especially the ones which are not yet in a position to pay dividend. For example, if you're still very heavy into R&D, right, that's what you prioritize. And for those companies, I think Hong Kong is becoming an even more attractive venue for them to consider doing their IPOs.
Well, I want to talk about how Hong Kong can take advantage of this push by Xi Jinping and the top leadership into the new 3, into EVs, into batteries, into solar, which has raised the ire, obviously, of Western trading partners and the allegations of overcapacity. So what can Hong Kong Exchange do to help, help the benefit of China's push for the new 3 and have more companies in these areas list, but at the same time, you have to deal with potential blowback from the West and institutional investors and their risk management? Okay.
So first of all, we need to provide them with the framework to list, right? Because at the end of the day, to build or to develop further in those big 3s, you need more companies, right? Better technology, and all that has to be supported by capital, accessibility to capital. So first of all, we already built the listing chapter for it. And that was the most recent addition to our Red Book. That's chapter 18C, which I wrote before I left listing 2 years ago. So with the chapter, right, and this is the chapter catering the needs of what we call specialist technology companies, right? These are pre-revenue companies, heavy into R&D, but they're in areas such as new energy, right, which is what you're alluding to, and it also covers other things like new materials, artificial intelligence, etc.
But there have only been two. Can I play the devil's advocate here? There's only been two under Chapter 18.
Yeah, one is...
Black Sesame is one, and one just got approval. Quantum.
No, they've launched.
They've launched.
Yeah, they've launched, okay. I read in the paper that the first day retail
June 13th, I guess they're going to
retail subscription is already 10 times oversubscribed.
That's Quantum Farm.
Yeah.
It's a biotech company.
It's a biotech company, yeah, but they use AI.
So would you call this a lukewarm response to the specialist technology push, the pre-revenue companies?
Well, I wouldn't say so. I think, first of all, we launched that chapter only a couple of years ago. And well, first of all, once you've launched a chapter, right, it takes time for companies to get the process ready, right? They need to draft the prospectus and all that, and then get the application in. And frankly, right, for companies, which have a good equity story, they're also timing the market. You only IPO once. You want the best valuation for your IPO. So I don't think, it's that. In fact, what we are actually seeing is a lot of interest, especially following those 5 measures from the CSRC. A lot of inquiries have come in from specialist technology as well as biotechnology companies. So I don't think there's an issue at all. But to your earlier question, what are we doing, right, to hopefully get that IPO momentum going or improving? So first of all the listing framework is there, for the specialist technology companies. And secondly, I think at the end of the day, it's about building out that ecosystem. So we have, if you go back to 2018 when we introduced 18A, the biotechnology chapter, I still remember I was in private practice back then. There was no ecosystem, right? We have no research analysts in the space in Hong Kong. We have very few specialist bankers or lawyers who know how to write a biotechnology prospectus in town. But in a short course of a few years, Hong Kong is now the second largest biotechnology fundraising hub in the world. And we have since listed, 60-odd biotechnology companies. And it's, it's a compelling offering that we've successfully built. So I think in terms of the new 3 that you're alluding to, is to get that ecosystem ready. Now, I do believe that the demand is there. You talk about overcapacity, but what we are seeing, and is this phenomena. Now, a lot of you are obviously aware that there are many countries have made pledges to become carbon neutral by 2050 or 2060. How are they going to get there? Okay, you don't just sort of wake up one day and all of a sudden you transition, right? You need to build up to it, and in building up to it, you need the enablers. So you need EVs, you need solar panels, you need wind turbines, and you want to get access to those in an affordable manner, right? So I still remember, and let me tell you a short story. I was in Beijing in March for the China Development Forum, and I attended a fireside chat. This one is between Tim Cook of Apple and a professor from Tsinghua University. And they were talking about green transitioning. That piqued my interest because, I was wondering what Tim Cook had to say. And he was very straightforward. He said that, by 2030, Apple wants to produce all their products, everything, in a carbon neutral manner. And, it's 2024, 6 years, right, from 2030. Right now, they have only the Apple Watch that they managed to produce in a carbon neutral manner. And he went on to say that it's because the supply chain is mostly China. All the components were sourced there. That got me thinking, right, so if that's one company, right, getting on with that green transitioning, multiply that for I don't know how many times, right? This is what all the countries which have made the pledge to be carbon neutral by 2050 or 2060, they have to do the same. So the demand is there, okay? Now, whether or not, people can debate about whether this is overcapacity or not, but I still would rebut by asking the same question: how are these countries going to get there?
Obviously, data security reviews are a big part of approval from the CSRC to list abroad, and Hong Kong is in essence a market that is a separate jurisdiction. So we're going to see more listings, but are we going to get the approval for those sensitive industries in AI, in quantum computing, in semiconductors? I know that we just got CSRC approval for the FedEx of China, SF.
Yes.
That potentially could be upwards of $3 billion. I've seen a number of different numbers, a 1 billion listing or $3 billion US dollars. So are you expecting a sort of a slow tide in or a tidal wave of listings coming?
So first of all, you mentioned the CSRC approval. That's a relatively new introduction. It only started from the end of March last year. So I think it does take a time, for the authorities in the mainland to get used to the rhythm of the mic just. Oh, okay. Yeah.
I was about to give you mine, so that's okay. We're good.
It came back. So it does take time, right, for everyone to get used to the rhythm of going through the filing process. And it's not just the CSRC, okay? In order for a company looking to list offshore, right, whether it's Hong Kong or other markets, they need to also go to the respective industry regulator to get, the green light. And so, I think what we saw last year, and a lot of people say, well, it took very long. It's more a teething issue for me. It seems like that to me. And over time, we have now seen companies in different categories successfully getting the green light. Okay, so I still remember the first batch came out in end of May last year, and was all H-share companies incorporated under PRC law. And everyone got very concerned. Oh, does it mean that red chip companies cannot get green light, right? Then, of course, the second batch, they approve a lot of red chips. Then people ask, oh, does that mean VIEs wouldn't get approval? Then, of course, VIEs got approved. So I think, we just have to wait for the process to bed down. I'm very...
There's an impatient room here. They want to know Didi. They want to know Aramco. They want to know Ant Financial. They want all the big ones. SF is a good step. That's going to be a big listing. Yeah. But you're cautious.
You know, I'm not...
I know you're not going to talk about specific
companies. Yeah, I'm
companies.
not able to talk about any specific company. But suffice to say that it's good that the room is talking about it, because, that to me means that you want to see these listings in Hong Kong, right? So we will do our part, to continue pitching to them. And I do really believe that Hong Kong is a very compelling listing platform for all these companies.
What's your priorities for your international outreach? Obviously, you had a conference here, Saudi Arabia. There is a Saudi ETF listed here. Could there be a Hong Kong or HSI index ETF in Riyadh? Could there be dual listings? What are you working at right now?
Yeah, I'd love to talk about that. I mean, of course, the Middle East is only one
we have a minute 25
example of our international outreach. We do a lot in Americas and Europe, as well as Southeast Asia. But yes, that CMF conference we hosted a few weeks ago was a smashing success, with 650 people attending the conference. Above 200 of them actually flew in from the Middle East. And what we did was not only the main stage events, we hosted 300 plus bilateral meetings to matchmake investors and corporates from both the Middle East as well as Hong Kong, China. And we think that, through these bilateral meetings, hopefully a lot of business opportunities will come out. Whether or not there will be an IPO, we will wait and see. But suffice to say that our cooperation with, especially the Saudi Tadawul Group, started in February last year when we signed the MOU, and we've been actively working on it. So it doesn't stop with an MOU, right? Since then, we've recognized Tadawul as a recognized stock exchange, so that a company listed there can come to Hong Kong for a secondary listing. We have listed the first ETF, Saudi ETF. This is the first in Asia and the biggest globally to date. And then we hosted CMF, which is very successful. And I will tell you that later this year in October, I will be there for the FII.
FII, yep.
Yeah.
We're out of time, but I have to ask you your best investment. I know you've been in the gym this morning already.
Oh, yes.
You wake up at 3:30 or 4 o'clock in the morning, so obviously you're investing in your health.
Yes.
But what's your most important investment, personally?
No, that's exactly my best investment. So, okay.
Oh.
For this job, it does require a lot of energy. So I'm a member of the 5 a.m. club, in fact, 4:45 to be exact. I go to the gym, I lift weights, but it's really great. Getting that energy, right, so that I can go into the office, have a fresh mind, and my job does give me a lot of energy back. On that happy note.
Thank you so much.
Thank you.
I have more questions, though. We'll have to resume the conversation at the
Dalian.
World Economic Forum in Dalian. Tune in at the end of
There we go.
All right, thank you.
Thank you.
To Bonnie Chan.
Thank you.